this chart is a chart I've not seen anywhere else. And that is the chart of the balance sheet, which is in white, versus in gold, it's the interest payments on the debt. This is the future use of the balance sheet, potentially matching the interest payments to come. You can see the massive spike that was due in 2025. Those are the payments from the pandemic period. So it looks to me like there's a lot of debasement to come. It says the balance sheet gets to $12 trillion. I actually think it goes higher because I think some of the banking crisis gets tacked on. So I'm looking for something like $14 trillion from the balance sheet.
Renowned macro guru Raoul predicts the imminent arrival of a crypto summer, characterized by rising cryptocurrency prices and outperforming other asset classes. Powell foresees cryptocurrencies surpassing bonds, equities, commodities, and real estate, with technology being the only comparable performer. He attributes this projected outperformance to the secular adoption cycles of cryptocurrencies and technology, perfectly aligned with an essential event that drives global asset prices, the cyclical debasement of fiat currencies. The origins of this trend can be traced back to the 2008 global financial crisis, during which interest rates plummeted worldwide. This Great Reset allowed central banks to address mounting debts and interest expenses. Powell believes this period initiated the current 3 to 5 year economic cycles, as central banks postponed paying interest expenses until years later. Now, he anticipates another rapid currency debasement phase, as central banks resort to printing more money to service their growing debts. Powell's analysis finds a strong correlation between increased global money supply and escalating asset prices. Taking a closer look at major central banks like the Federal Reserve, European Central Bank, Bank of Japan, Bank of England, and the People's Bank of China, Powell notes their significant contributions to the global money supply and liquidity trends. He asserts that these central banks are already injecting money into their economies or planning to do so within the next 2 years. In particular, he predicts the Federal Reserve's balance sheet to exceed $14 trillion, fueling market dynamics and driving impressive gains in the cryptocurrency sector during the anticipated crypto summer.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
My hypothesis, and you've heard me talk about the everything code, is that debasement of currency is the main driver of asset prices globally. Currencies are getting debased by excess printing. We all know this from crypto, that if you have too much inflation in your money supply of a token, it tends to go down a lot. And that's the same with currencies. But all of fiat currencies being debased, and that's driving the reserve currency of the dollar to get debased against asset prices. So optically, it makes things like the S&P 500, property prices, gold prices go up. But once you divide them by the debasement, or even just use the Fed balance sheet as an easy approximation, what they tend to do is operate in line with the debasement, i.e. they're just holding water. They're not making you wealthier. There's not much of an investment. It's kind of like a bond of old. But I found in my work that two things really outperformed: technology and crypto, because they've got secular adoption cycles too. Okay, so where are we in the liquidity cycle? You see a lot of noise on Twitter because everyone's starting to pick up about this liquidity. Again, I'm using liquidity here as a proxy for debasement, not just pure liquidity. I think that's less relevant. So the GMI weekly liquidity index, year on year, bottomed exactly when ETH bottomed in June. That was the first signal to me that something has changed. So that got me focused on buying ETH. Then we saw the non-confirmation of ETH when Bitcoin bottomed in November. That was really interesting to me. And that coincided with ongoing increase in liquidity. If you remember, it started with the Bank of Japan. They started printing money to buy JGBs in a process called yield curve control, expanding their balance sheet significantly. That was then followed by the Bank of England, who expanded their balance sheet to try and bail out some of the pension system and also kind of stop their bond market getting out of control. The Chinese have been slowly debasing their own currency by a slow crawl of debasement. And then we saw the US come in March when they had to quickly inject money into the banks, which they've been drawing out again. The trend is higher, but too many people get fixated on the next chart, which is the overall trend itself, not the rate of change, which is more important. But the overall trend, well, that is the same trend as most asset prices. And that's because debasement is lowering the denominator. So what we saw is that massive rise in liquidity that happened, or debasement that happened in 2020 and 2021, and that some of that got withdrawn. But we're back basically to the long-term trend where we've been crawling for a while now. So we're not seeing a massive shrinkage in the balance sheets. We're seeing some expansion, which is what that previous chart showed you. So that's what's driving the market higher, much to everybody's chagrin. Now, remember, a lot of people get confused about this because everyone's using different measures of liquidity. Our measure is G5 central bank balance sheets, maybe G6, and then we use a kind of net liquidity for all of those different markets, combine them into one super index, and it gives us like a 97% correlation with the NASDAQ. So it's a very good approximation for what's happening. Other people are just using Fed net liquidity. Now, that's useful, and we'll come on to that in a bit, but it's not everything, and we're starting to see divergences of things like NASDAQ from that. That's normal. What we find, and crypto will do this a lot, it will diverge from liquidity enormously because that's the bull cycle. That's when adoption goes through the roof and speculation goes through the roof, and you get the massive outperformance versus liquidity. We should expect that. If it doesn't, then it's not going to outperform the balance sheet. Remember that, right? So we're expecting to see that phase.
Based on Pel's insightful analysis, investing in Bitcoin, Ethereum, and other promising crypto projects emerges as a wise decision, particularly given the prevailing economic conditions. Crypto stands out as one of the two asset classes that Pel identifies as outperforming the Federal Reserve's balance sheet. Furthermore, it serves as an exit ramp and insurance against the impending rapid currency debasement, which appears poised to worsen significantly within the next 1 to 2 years. The consequences of the reckless money printing in response to the COVID-19 pandemic will soon be felt on a global scale. Let's return to Raoul Pal's broadcast, where he delves deeper into the situation and its implications for cryptocurrency prices.
So what is this balance sheet expansion all about? This chart is a chart I've not seen anywhere else. And that is the chart of the balance sheet, which is in white, versus in gold, it's the interest payments on the debt. And it's lagged by 36 months or leads it by 36 months. What it's telling you is that for some reason, all interest payments from 36 months ago are being paid for by debasement, i.e. they basically put them on the Fed balance sheet in quantitative easing. So what is this all about? This is to do with the Great Reset. One thing that everybody expected was a Great Reset. Well, I've now realized it happened. It happened in 2008 when all rates went to zero globally. And that essentially allowed everybody to reset their debt payments. Okay, that's like a debt jubilee. You didn't forgive the whole debt, but you basically forgave the interest payment. And everybody rolled their debts 3 to 5 years. So now we have a concentration of all government debts around the world in this 3 to 5 year sector, which every 3 to 5 years gets rolled. And that is leading to a cyclicality in the economy, that it starts slowing down because the interest payments become due, the economy starts slowing down, and eventually the central banks monetize those interest payments from the previous cycle and roll over the debt. I'm expecting the same again. And that would give us this chart. This is the future use of the balance sheet, potentially matching the interest payments to come. You can see the massive spike that was due in 2025. Those are the payments from the pandemic period. So it looks to me like there's a lot of debasement to come. It says the balance sheet gets to $12 trillion. I actually think it goes higher because I think some of the banking crisis gets tacked on. So I'm looking for something like $14 trillion from the balance sheet. Let's not get caught up in the exact projections and the exact maths. It basically tells us there's more balance sheet woes to come, more debasement, and that's very good for crypto. It also proves out the case why we need crypto, the broken financial system. Now, if you remember, Bitcoin was launched in 2008, 2009 period. That is the same period when interest rates went to zero. And guess what? The halving cycle is exactly the same as the economic debt payment cycle. They're all the same thing because they were all born at the same time. So that, I think, is the big driver. The macro is the big driver. So when we zoom out, we look at the Bitcoin chart on a log scale. And you can see the trend rate of adoption over time. The acceleration is when the balance sheets start getting used and people start putting money into the space and the space grows over time. And we will see that ongoing. So the total crypto market cap hit 3 trillion at peak. What will it be at next peak? Probably 10 trillion. As more money comes in, more people stay in the system and opt out of the old system, or find new uses and applications in a Web3 world that makes the internet just better, fairer, and more democratized and more decentralized. But that trend rate of Bitcoin, well, we got in that beautiful cyclical low the buying opportunity we were all looking for. People are still arguing whether it's going to go lower, etc. The probability is it put in the lows and now we're on the upcycle. And it's what I think is the start of crypto spring. I think we've been through crypto spring and we're going to be moving into crypto summer.
Raoul predicts that the bearish trend for Bitcoin and other cryptocurrencies has reached its lows, signaling the onset of an approaching crypto summer. In a previous interview, he projected that the next bull market could drive Bitcoin's value to a range of $138,000 to $200,000, representing a substantial 350% to 550% increase from current prices. Moreover, Powell foresees significant gains for Ethereum, anticipating new all-time highs later this year, and he is optimistic about Solana, believing it could surge another 20 times from its current value. What are your thoughts on Raoul Pell's analysis and predictions? Do you agree that the market has bottomed out and a strong crypto summer is on the horizon? Please share your comments and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.